Hello everyone, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool, and one of the founding partners of the Dividend Kings. And what I'm doing today is I'm offering kind of something a little different to the Dividend Kings subscribers. As you know, we provide an awful lot of good dividend stock content on this site. We have our portfolio trackers where we have our top buy list, our Super Swan valuation list, our Dividend Aristocrats valuation, and so on and so forth. So there's a lot of things that Dividend King subscribers can choose from, but I thought I'd throw something a little different here. I was recently asked to write and produce another video on this company. I wrote about it and produced a video about a year ago, and it's a stock that I personally never owned, so I want to point that out right in the beginning. But I do find it intriguing, so I thought those of you who are looking for something a little different might find this enjoyable. This is Magna International, and let me give you some quick insights into the company if you're not familiar with the company. It is a supplier to the automotive industry. They supply things like body structures, transmissions, aerodynamics, fuel systems, mirrors, mechanitronics, whatever that is, all-wheel and four-wheel drive systems, etc. So they supplement the automotive industry. Now, I've never been a big fan of investing directly in the automotive industry because it's very, very cyclical. And having said that, this company is kind of cyclical itself, and I want to point that out right from the get-go. If you look at it, it went through the 2001 recession without a lot of cyclical issues, if you will. They had modest earnings growth. They had decent dividend growth, although they did freeze their dividend in 2002. By the way, they cut it in 2003, and then coming into the Great Recession, they had a couple of really bad years of earnings. They had two massive drawdowns in earnings. Earnings went from $1.87 to $84, and then they generated a 67-cent actual loss for 2009, but then earnings began to grow again. And if you look at it more recently, just for the more recent growth potential here, I'm going to shorten that one more year so I don't get it too skewed. The company's grown at about 13% a year. So it is an interesting company. They have cut their dividend. Let's look at their dividend performance real quick. They have cut their dividend on occasions, number one, and they've cut it a great deal. But now since coming out of the recession, they've had really a great dividend record. So let's go back and look at it just since, well, actually, let me go one more year here. Let's look at it since 2010, and you can see their dividend growth has been exceptional. Actually, let me cut one more year. I want to get rid of that big increase that they had after they reinstated the dividend after almost eliminating it. So the company's growing their dividend at a very fast rate. In 2018, they grew it by about 19.7%. It's already up to $1.46 for this year. So they've grown it again very nicely, and it's kind of an interesting company. Now, if you look at long-term performance, in spite of all this cyclicality, I want you to notice it's generated significantly more dividend income than the S&P 500, and it's also outproduced it on a total return basis rather dramatically. 9%, or 10,000 grew to 55 versus 10,000 growing to 21,000 since December of 1999. So the company really does have great long-term performance. However, there's a lot of lumpiness in the middle that I think, the average dividend investor might be concerned with, especially dividend cuts and dividend freezes. But yet, to counterbalance that, if you will, the company has produced an awful lot of dividend income for its shareholders over time. And another thing I want to point out about this stock, so if we look at earnings growth here, its earnings growth has been quite nice. Again, since coming out of the Great Recession, they had this one, earnings went from 84 cents to minus 67, then back up to $2, and then they've been doing it ever since. And the company's made some strategic moves that I'll let you research on your own that I think have partially given us this huge surge in earnings. So if you look at it since coming out of the Great Recession again, I'm going to go to 2011, we've had really nice growth. Performance has been good. The company did have a bad quarter for the first quarter of this year, but they just reported their second quarter, and they did beat estimates, and they did on both earnings as well as revenues. And the stock got a little bit of recovery as a result. But if you look at it going forward, it's followed by quite a few analysts. There's 16 analysts expecting a negative growth rate this year, as I previously mentioned, but then they expect 15 of them expect 10% growth the following year, and then 19% growth going into 2021. This just simply means there's no analyst giving estimates, so it's not meaning they're going to cut the dividend. I want to make that clear. So I'm only going to go out this far, but this company, based on its low valuation, a blended PE is 7.8. it's offering almost a 3% dividend yield. In fact, if you catch it, just a little bit below its current $50 price, you could be picking up a current dividend yield of 3%. It's A- rated with only 27% debt. So it really is kind of an intriguing company. Now, I want to look at valuation for a moment here, because if you look at how undervalued the stock has been, really going back since 2015, I'd like to go ahead and go into fund graphs here and show you something that I personally like. I've gone into fund graphs here. I've gone into the company's income statement. And what I'm looking at is our fundamentals in millions graph on fund graphs. And I want you to look at shareholder buybacks here. The company has generated great dividend growth, as I showed you a minute ago, but they've also been buying back their shares, which is obviously anti-dilutive. In other words, they've been increasing shareholder ownership, if you will, in the company, and that's also helping support their dividends, etc. So I really like what the company's doing. I like to see a company buying back shares when their stock price is cheap. And of course, as I pointed out already, this company's price is currently very, very inexpensive. PE ratios for the last couple of years have been very low. We're looking at PE ratios in the 8 or 9 category. It's currently a blended PE, as I mentioned, of 7.84. So the company's, very, very inexpensive. Now, I do want to look at a couple of other things about this company from a standpoint of operating cash flow. I really like to look at operating cash flow because I'm looking for dividend coverage here. The company's trading at a discount to its normal operating cash flow valuation, but I want you to notice the company generates significantly more operating cash flow than they need to cover their dividend. Their operating cash flow payout ratio is only about 12% here recently. It's been in the 11 or 12% range. Then I want to move into the all-important free cash flow because, again, I'm looking for dividend coverage here primarily, and we do see that they didn't cover their dividend in 2011, but otherwise their free cash flow is once again significantly above their dividend payments, which tells me the dividend is pretty secure. Again, it's an A- company with 27% debt to capital. If I look at it from a standpoint of valuation on a price to EBITDA, I also see that the company is very attractively valued. So when I'm looking at all these different metrics, I see a very interesting company here. Again, I admit it that I've never owned the stock. It's starting to look intriguing at these levels here. I'm actually getting interested in learning more about the company, and I'm going to be researching it a little deeper as a result. But I did feel like it was one that would be interesting to show, just to give you something maybe different to look at. It's got a 2.94% yield. It's got tremendous growth potential, etc.